Hello everyone and welcome to another episode of The Founder Files. Today I'm talking with Thomas Brennan, the co-founder and CEO of Franc, which is a fintech startup taking the South African investment market by storm. Thomas is an engineer by profession, having gained his doctorate in engineering from the University of Oxford, but cares deeply about using technology to help people make better decisions. Enter Franc, an investment marketplace making it much easier and more straightforward for South Africans to invest their hard-earned rands. Besides the founding story, we chat today about how Franc was able to achieve product market fit in a market where so few people are investing and how they've been able to acquire customers and become successful as a business. We get into some depth about the nature of the problem of investing in South Africa and all the factors affecting savings and investments for South Africans, which is an honestly great discussion for any idea stage founder who's thinking about starting a fintech startup. Thomas talks about their product development history and roadmap and how customer needs have been at the center of any development idea and how they've managed this. He also explains how he crowdsources innovation through his team and how they've developed a culture of autonomy at Franc, which is absolute gold for anyone who's interested in improving themselves as a leader. Then, being predominantly a B2C business, we talk about Franc's growth into a B2B play and the lessons learned there. And we finish off by talking about their scaling challenges, which includes everything from geographical expansion to cybersecurity and fundraising. This is a deeply authentic conversation with an exceptionally intelligent man who shares the real story of building a fintech startup in South Africa. So if you want to make sure that you don't miss any more of these true and honest conversations with founders like Tom, then make sure you're following us on your preferred podcast platform and on social media. So, ladies and gentlemen, without further ado, Thomas Brennan. Welcome to The Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between. Thomas Brennan, welcome to The Founder Files. I'm in a situation where I'm investing some of my cash and trying to look for simple ways to do it. And I've realized that it's been overwhelmingly difficult. So I think before I start going down this journey and dealing with, financial planners, financial advisors, I've got a personal motivation to chat to you about Franc right now, besides sharing this story with the audience. I'm, a potential customer at the same time. So can't wait to get into the story. But yeah, welcome to the show.
Thanks very much. It's great to be on board, Cameron.
So Tom, I'm sure quite a few people in the audience have at least heard about you, have seen what's going on. I think Franc is really making waves in the tech startup ecosystem at the moment, or at least you are being involved in quite a few PR activities, and we're seeing you at the Startup Club, for example. But before getting into the story, do you mind just explaining what Franc is as a business and what the business model is?
Sure. So as a business, Franc is an easy and simple way to invest. We built a marketplace that allows anybody to invest as much money as they want, whenever they want, conveniently through a mobile app. We've also allowed that marketplace to be accessed by partners. So that's companies that want to embed a Franc wallet in their app or service. And we've got plans and ambitions to roll out to companies that want to provide employee benefits, so retirement savings for their employees. We can get into a bit of the detail around that. As a business, we generate revenue.
Best believe we will.
As a business, we generate revenue fundamentally from the assets under management, so the money that we facilitate getting into those underlying investment products. But we also have built out more and more value-added services that are helpful for customers. So for example, if you want to be able to cash out immediately, so if you need to make a withdrawal for an emergency, very often investments can take a few days for that money to clear into your account. But we can give you immediate access to your cash for a small fee, for example. Obviously, also partnering with other companies, we are licensing our technology fundamentally, and there are licensing fees associated with that. So at a very high level, we're an investment marketplace that's accessible by anybody simply, without any minimums. And we want to hopefully see more and more people invest. That's our kind of real North Star and what we're trying to achieve.
Yeah, that would be fantastic. I obviously want to get a bit more context on where the business is at now, but I still want to wrap my head around the business model, because what you've mentioned is like an intersection between, like you said, an investment marketplace, asset management, FSP. So in terms of the way that the money's held, are you the asset manager that will then essentially invest into Satrix, Alan Gray into ETFs on behalf of Frank's clients? Or are you just straight a direct platform to invest into those on behalf of the your clients yourself? Who holds the money? And then is it a fee-based, is it a commission-based towards Satrix? Is it a percentage? Like, how does that work?
Sure. Great question. Important question. Obviously, financial services are heavily regulated, and we have a license to provide investment advice and offer intermediary services. So to clarify, so there are fundamentally three different types of assets of FSPs. 1, 2, and 3. That's really what they are. Category 1, which is what we are, is be able to provide advice. Most category 1 advisors are financial advisors, like your guys in suitcases coming over, knocking on your door, talking about your money, giving you recommendation about what you should be investing in, and then helping you invest in those underlying products. That brings us to the product providers. So those are category 2 FSPs, and those are companies like Alan Gray, Satrix, Prescient, Signia, Carnation, etc. I'm sure those would be brands that are familiar to most people. They are largely asset managers, so they have the discretion of accepting deposits and then choosing how to invest those deposits. Some of them offer ETFs, which are exchange-traded funds. So these are index trackers largely. So like tracking the top 40 companies on the stock exchange or the top 500 companies on the US stock exchange, for example, S&P 500. The last category of FSPs is called an investment administrator. And these are largely tech platforms, and their primary purpose is bulking. So they largely service pension funds, and it's saying, okay, I will receive a lump deposit from a pension fund at the end of the month with instructions on how that money should be invested. They have connections with all of the asset managers, the category 2 FSPs, and they can, invest that accordingly. Interestingly, we're a robo-advisor, so we are fundamentally tech-driven. People get their advice by using our mobile application, and we help them figure out what investment strategy is right for them and the goals that they have and what they want to achieve. But regulation changed a few years ago. Previously, we, as a category 1, could operate directly with the category 2, an asset manager, to facilitate your investment instructions. But what happened recently is they changed the regulation such that we have to now go through an investment administrator, a category 3. So it's like from 1 to 3 to 2. So when it comes to your question of like where actually is the money sitting, we don't sit on deposits. We're effectively like a pass-through organization in much the same way that the category 3 is a pass-through organization, with the money eventually ending up with Alan Gray, Satrix, and Signia for our retail clients, who are the underlying kind of asset managers who, try and return whether it's interest or capital growth to the underlying investors, for those deposits. Does that make things a bit clearer?
Yeah, it does. It also potentially partially answers the next question I was going to ask, because I imagine a huge problem for these category 2 FSPs is that they want to say yes to obviously money, right? Like I think this is obvious, but in terms of more investors coming in, but the nature of the population and your customer base, you said there's no minimums, which I find quite interesting because a lot of people say certain minimums but no maximums, right? And so for you, there's no minimum. So there's loads of these very small value micro investors coming onto the platform, and I imagine that's for a category 2 is a lot of complexity, but also potentially not worth the juice isn't worth the squeeze to try and manage all of that. But then you going into the level 3, which is what you said is from a bulking perspective, they're essentially able to provide them with just like one source that goes into the category 2 to essentially invest this bulk amount of money that then they will then go back and then distribute through your platform back to the consumer. Is that how it works?
Yeah, that's correct. And then maybe just to back up, we were very focused when we started the business. There are lots of barriers to investing. Some of them are material, like financial minimums. So for example, if you were to go to Alan Gray and try to open up an account in your name as an individual, the minimum investment amount is either 50,000 Rand as a lump sum deposit or 1,000 Rand, debit order. A lot of people
That's such
can't
a small
afford that.
proportion of the South African population that can do that.
Tiny. And I think that's not to do a disservice to Alan Gray. They are partners of ours. So, it's just their systems are not necessarily geared up for taking on board retail clients. Like if you were to look at how much of their assets under management are institutional money versus retail money, retail is probably like, I'd be surprised if it's more than 15%, right? So now they don't really have an incentive to build out a slick, like onboarding digital, retail offering, because it's not really where their money's coming from. So that's why they only really will do it if it's worth their while. So hence the high minimums, right? So that's a problem because obviously it excludes a lot of people from that. What's also problematic is financial advisors, that the old school like brokers, they also, if they're going to drive out to wherever to go give you financial advice, like they also want to know that it's worth their while. So they tend to also select people that have sufficient net worth to make it worth their while. And actually their minimums very often are a lot higher than Alan Gray's. Like you've got to be committing to like 500,000 Rand because that's going to justify their investment in you as an individual. So that's why both the asset managers as well as the financial advisors have largely excluded, let's call it like even upper middle income, not worth your while, down, all the way down. So that's why it's a fundamental problem in the market, in the sense that you've got a lot of people who are not investing because they don't know where to start. They don't know what to do with their savings. It's very difficult to do it yourself. It's overwhelming to do it yourself. And they
even
can't
if you wanted
afford.
To, you can't. You literally have to say. You have to save up. Like if you're saving $1,000 a month, you are saving up for nearly 5 years. Well, maybe 4 and a bit years. I'm trying to do quick maths in my head. Even though maths used to be my strong suit, now it's strategy. But the point now, it's like you got to save up like that long just to be able to have the minimum amount to be able to invest into. It's just not. It's not practical. And we were talking offline. Is like a huge problem is the fact that South Africa's got like a 63%, like savings percentages. Like 63% of the adult population engages in savings of some form of another, but investment penetration is only 7%. So only 7% of adults in South Africa earning an income invest that income.
Correct. Yeah, and obviously that's like very low compared to peer countries as well as internationally. I mean, like, I think the highest investment penetration is Singapore, where they're sitting at about like 85% of the adult population invest. So, average in the OECD nations is about 65. So like we're an order of magnitude lower in terms of the proportion of people that invest. And I think a lot of it is for the structural difficulties that I mentioned. But then the other barrier is knowledge. Like you don't know, people don't know. Like financial literacy isn't taught in schools. It's hard to come by good quality financial literacy education. I'm an engineer, studied engineering, never got any information about how to manage my money from my parents. My mom was a maths teacher, my dad was a pilot. I had to learn some hard lessons observing them about like what not to do with money. So it's I think a bit of a tragedy. I don't want to segue too much, but my passion in life is using technology to help people make good decisions. And like fundamentally, the only guaranteed thing in life is death and taxes, right? Which everyone, I'm sure, has heard that expression before. And like, what does that mean? Like, your biology is important and money is important. So like fundamentally, you should know a little bit about human biology, which the earlier part of my career was very much focused in the health space. And then money, like I think it's almost like a life responsibility or a life right that people should have some basic knowledge about their health and their wealth. And that rhymes. I didn't intend that to rhyme, but it rhymes.
So, Tom, thank you for sharing a lot about your authentic purpose there. I think exactly what you said is if you can, empower people with information using technology. I know I'm paraphrasing, but that's helping them make good decisions. I think it was. That's a really authentic purpose that you have. And to the point that you're talking about, this is where, like, for me as an organizational psychologist, but even though I've got a business science degree and I've done a master's in commerce, I still don't really know a thing about investing. But one thing I also do understand, at least from a psychology perspective, is that the concept of health and wellness is very broad. And to your point there is like you've got your biology in terms of death, and then you've also got your taxes in terms of money, and that's also an aspect of financial wellness. That's a huge actually issue in this country. Is like we're known as one of the most unhealthy, well, if not the unhealthiest country in the world. And if you look at our economy and the ability of our people to actually have a sense of financial wellness and issues of poverty, really, it's a huge part of it. So, yeah, I just wanted to echo that because, at least philosophically speaking, I fundamentally agree with what you're doing, and I think it's fantastic. So I think that's also the perfect segue to, I think we've given enough of the philosophical and personal motivational context around starting Franc. But talk to me about the founding story. How did you start Franc as a business?
Sure. So I think I would probably always have considered myself an engineer, and I like solving problems. And I am quite independent and risk-taking as a character, as an individual. So I think, creating my own business or solving the problems that I wanted to choose to solve was natural to me. I tried, as mentioned, I think, to get 2 kind of startups off the ground in the preventative health space. So again, using technology, helping people make better decisions about their health. Tried in South Africa, like 2009. I just finished my doctorate. But I didn't build the app. I didn't build the technology. I had a sort of a concept and tried to sell what is now quite common, people having, wearable devices, and that device being able to give you a lot of information about what's happening with your health, whether that's monitoring your sleep, your heart rate variability. All of that was like my previous life. But it was so early trying to pitch that to people that, wrapping their head around, oh, like healthcare is like a doctor's office. And I was like, no, actually, you're living your health, right? Know how you're doing and, what trajectory you're going in and what velocity you are moving in that direction was self-evident to me. Tough to sell. So I got myself over to MIT in the States and tried to do the same thing there. I think the difficulty in preventative medicine is it's actually a really difficult business model. Like, people fundamentally don't care about their health until it's too late. I'm talking about mass market. You see a changing niche now where with more wearables, and people taking exercise pretty seriously, and sort of amateur athletes, if you want to call it that, people trying to like really get on top of their health. I think that's a growing market segment, which is great, but I kind of was 10 years too early, if you will, 15 years too early. So I got back to South Africa 2015, largely for family reasons. My father was elderly and had moved into a nursing home in Cape Town. And I got a job at Discovery in their product development team. They called it the R&D lab. It sat at a group level. And it gave me visibility across a whole range of financial services. And I suppose it was at that time that I kind of gave up the health ghost. And I just saw in a very real way, like, what is the state of financial services, in South Africa. And Discovery arguably, could be considered one of the best of the lot, right? The most innovative, innovating, constantly driving kind of new product. And even then I thought, like, sure, I can do better than this. But again, they largely service quite a small market segment, which, 3 million people have Discovery Health policies out of a population of 60 million, which is why they are investing so much in their offshore kind of activities and expansion, because the high net worth kind of client base that they want to play in is just so small. And then you start scratching at some of those problems that I mentioned around access, around knowledge, being able to, I think, again, do a fundamental thing, which is kind of manage and create your own wealth. It's a hugely asymmetric market. And I think that there was a natural reaction against that. Like, I started earning a salary for the first time in my life, apart from being like a glorified postdoc or entrepreneur. And, there are people like who dedicate their energy trying to help you, like, to take your money away from you without you knowing. And a lot of them, unfortunately, I would say, operate within the financial services space. there's a lot of opaqueness. There's a lot of like misaligned incentives, which again just kind of riled me up. So Franc is a reaction to that. We're trying to be very direct, very transparent. Standing by the products that we sell, wanting to be high quality, giving people access to the best without necessarily capitalizing off their ignorance. And then it comes down to using technology very efficiently, like building a platform that can, we don't have to spend all of that money that Alan Gray does to onboard a new client. Somebody can just go to the app stores, download the app and get going. And that costs us very little. So, I do believe that everyone will manage their own wealth in the near future themselves. I think it's just like there's just a general trend where technology is disintermediated huge sectors of the market. And I think financial services are next. And I'd like to be one of the pioneers in the wealth space, because I feel like helping people take ownership of their wealth is the same, responsibility as helping people take ownership of their health. And if you win, I win, that's great.
No, so that's, again, philosophically aligned, right? This is, I think what you're doing is fantastic and very, very much needed. Also, while you were talking, I was thinking about a friend of mine. He's an incredibly intelligent human being. He's got CFA level 3. Like he's a genuinely like one of those people where like we talk about product market founder fit and obviously the startup world. But with him, he has just found a niche and skill set that he's a genius level at. And even he says, on a consistent basis, there is absolutely no asset manager that's able to outperform the S&P 500. Just put your money into the S&P 500 regularly, and it will grow. And I'm like, cool, that's fantastic. How do I do that, right? And even that's just not a simple and straightforward process. So I really understand the need, even for people who are investment aware and even know what it is that they want to invest in. The how part is still confusing, and I think for most people, it's all of the above is unknown.
Just to comment on that, I suppose as an engineer coming into investments, coming into financial services, I kind of look at things from a first principles perspective. And you actually realize like exactly what your friend said, the vast majority of people will do fine by taking out kind of investing in low cost index tracking ETFs, because it's inherently diversified. The cost is incredibly low. And Warren Buffett says that, right? Some of the luminaries of like the investment world say actually everyone should be doing this. Like, I don't think I'm not trying to sell something that is bespoke or unusual. Like literally the most sophisticated investors in the world have said like actually the products that Franc offers, cash, the money market fund, local index tracking ETF and offshore index tracking ETF, is a combination. Obviously, different risk profiles. You can combine them appropriately for what you want to achieve. But like, that's all you need. That's all that anybody needs, right? But in some ways, I'm selling vitamins, right? You had the talk on Friday. Like, are you a painkiller? Or are you selling vitamins? And I honestly believe I'm in the vitamin game, which is because that's not sexy. People want to double their money somehow, right? And whether that's online gambling or like trading stocks or like trying to buy low, sell high, like you get a huge dopamine kick if you get it right. And you even get a dopamine kick if you get it wrong, which is why it's addictive. It's tough, man. I'm not in that game. And, I've kind of had to think hard about how to get in that game to some degree.
Yeah. No, I get you, man. Like even speaking towards the healthcare space, I mean, preventative medicine and health prevention, in terms of psychology as well, same problem. People only really become aware, and it also only becomes important, I'd say, only if people really have a value around self-actualization. That's the point. That's usually when physical health is there. Like this is entrepreneurs through and through. The ice baths, the sleep tracking, the no alcohol, at this time, the diet, like you name it. Entrepreneurs are probably the best example of this. But this is a level of Maslow's hierarchy of needs. So many needs of yours are met that you're able to now start valuing this. But the majority of people in the world, it's not necessarily the case. And so I think about what you're talking about, and it's like if I had to try sell wearables around data, And the sell was about the fact that it's like, oh, you might get cancer one day. Don't you want to make sure that you avoid that? And it was like, yeah, I might get cancer one day, but it's like, it's one day and it's a maybe. And it's like, but that is, you're trying to turn something that really is a vitamin into a painkiller, and it's just not necessarily working. And I really want to just contextualize that as a metaphorical example, because my next question is, your post-product market fit, you've well established, like you're really strong within the market. Being a vitamin play where everyone in this market's always talking about you got to be a painkiller, just how did you get going in the first place when everyone's talking this painkiller language? And how did you find product market fit and know that you achieved it?
Great question. And I'll be first to disclose, so my co-founder, Sebastian, he's an actuary, I'm an engineer. Like, neither of us had marketing or growth background or experience for that matter. And so I built the first version of the app, and it was a classic, just there's a problem, I built a solution, and just wait for people to come and start using you. And we've actually retrospectively learned about like who is using us. So every quarter we do a product market fit survey. We call people, we have a digital online survey, and we obviously want to get to know them and where they're coming from, and where they are in their sort of investment or kind of savings journey. But we also ask them, how likely are you to, how will you feel if Frank were no longer around, right? And we measure how many people say they would be very disappointed. And we started off at about 45%, and over time we've kind of inched that up to about 65%. And that's a strong, I think, indicator that we actually do have product market fit, that a lot of our users stick around. We've got like a 1% churn. So that's people on an annual basis who deactivate the account. The challenge is obviously getting people to become investors. So let's just park that for what that is. But a big thing for me then was trying to understand, for whom are we? And this is a question I asked myself like 6 months ago. When we're vitamins to some people, but to some people we are a painkiller. So who are they? And obviously a starting point is looking at those people that say they would be very, very disappointed, and doing some data analysis. Luckily that's kind of within my skill set. I was not surprised, but young Black woman between the ages of like 25 and 35. And for us, like what we offer, which is, let's call it like easy investing. You don't have to heavily invest a lot of time trying to understand, make decisions, choose between various complex things. It's goal-based, so it's nicely aligned with the way in which they are thinking about their life, their life stage at that particular moment. Maybe they want to start a family, maybe they want to get married, buy a house, definitely start doing something for retirement. They've got some disposable income. What we are selling, which is effectively a goal-based investment proposition, is a painkiller, because they were actively looking for a solution like this. And we've had interviews with a lot of users who've come from the likes of Easy Equities. And we're like, well, why did you choose us? We're just like, well, I couldn't differentiate the different goals that I have with Easy Equities. It's just one portfolio, and you must choose how you invest your money. Whereas with Franc, they've got like a wallet, like a goal for buying a house. They've got a goal for getting married. They've got a goal for like the emergency savings. And each goal has a different strategy. And once those goals are set up, it's simple. Every month there's just a deduction off their bank account, and that money is automatically invested into those respective goals. So for that specific user group, we are a painkiller. So it's I suppose I still believe like everyone should be doing this, but I don't think we're a painkiller for everyone. We're a kind of a painkiller for a small subset, and that's not influencing all of our growth activities. How do we create more awareness in that user group? How do we exert more influence on that user group, et cetera, et cetera?
Yeah, and that just goes to show the understanding the right customer segment. And because again, you can be a vitamin for loads of people, but a painkiller for a few. And the nature of it is the same thing for us. It's like when you're operating in the market, it's even the stats that Keith Jones was sharing, like 95% of your customers aren't ready to buy right now. And then about 5% of them are, and like 2 will choose you. It's the same nature with us, is the fact that there's so many people that we can work with, but we're a vitamin to them right now. Like, why is it do I need help with my strategy? unless my business is not growing and that's becoming painful, or I'm tired of being stuck in the founder's trap and I want to get out of that and make sure my business can be sustainable without me. And until those problems are potent enough for you to do something about it, we are a vitamin. We're nice to have, like in terms of strategy, because it's working. And I compare it to when we were speaking offline, is like I was obviously thinking about myself in relation to Frank, and it's like a lot of young men, I think, work hard, make money, spend money on nice things, right? That's our whole like financial strategy. Whilst for women is like there's a lot more planning ahead. There's thinking about family. There's thinking about the kind of, and specifically the lifestyle they want to have. And the exposure that I've had to financial advisors, I'm very jaded because they're not actually financial advisors. They are policy salesmen. They're going there and trying to sell you some kind of retirement annuity or some kind of life insurance policy, specifically or like associated with one company. But what they're not trying to do is provide you with a financial management strategy. And that's exactly what I think that's where obviously CFPs come in and chartered financial planners. And I think the point is what I think is amazing at an industry level is you've opened that up. Because that is something that is truly also, I think, ethically the right way to do it for customers in terms of helping manage their money is what is your goal? What is the lifestyle that you want to live in practically? How do you need to manage your money for that? And the fact that you made that so simple is just, I think it's one of those problems where it's one of those things where the market just needs to catch up and kind of wake up. And I think inevitably will happen with behavioral change. And I think because of that, why I'm enthusiastic about where your timing is. And the fact that you've got 65% of your users saying they'd be very disappointed if this is gone, I mean, like even the market's saying that that's the case. Mm. So Tom, unless you've got something you want to comment on that, let's go into this scaling story.
No, it's great, man. But like as always, you can imagine, I'd just give me more customers. You know, I'm hustling, I'm hustling hard, and obviously, you know, with growth comes investment, being able to spend more money on marketing. Yeah. So like I have a firm conviction that we've got a good business, right? I've got a firm conviction that, you know, people need what we are selling. It's just a question now of getting that message out there. And I think what's like nice for me, and I'm really seeing this change, is, you know, when we started the business, when we launched, like there was really low conversion rate. So about, you know, 8% of downloads actually put money into their account. Like now we're up to like 20%, you know. I would like that to be 50% or above, right? So that people, when they come to us, they have a clear expectation of like, okay, with Frank, I'm going to be able to create wealth, right? And I'm going to do so over a long period of time at low cost and get good advice for the products that I need to access in order to achieve, you know, the things I want to achieve. Whereas at the moment, unfortunately, like people don't know what they want, right? So going back to that financial literacy challenge, you know, if somebody's looking to double their money with Frank in like 6 months, like unfortunately, that's not what we're selling. You can try a gambling platform. You're probably going to lose your money, but you know, if those are your expectations, like it's not an itch we can scratch.
Yeah, 100%. I think what's also difficult is we're operating within a society that's quite short-term oriented in benefit reward or cost reward mechanism. It's like I want to it's the long-term play is something that's usually. It's also, I think, a symptom of why we've got such bad inequality is because people that think long-term are already people that have got a high level of wealth.
The luxury to think long-term, yeah.
It's a luxury to think long-term. It's not a necessity.
But I think what's interesting is, and so maybe just a segue, and maybe your thought will come back to you, but it's been something that we've also realized recently is that you can't go from saving and not having a long-term view on life to investing and having a long-term view on life. Like that's one jump too many. So where we are coming to now is like actually the starting point, we're going to be launching a savings account in the next few months. And that's basically saying like, just do better than what you're doing now. Because at the moment, people are saving, as mentioned, you know, about 65% of people are not spending at the end of, you know, end of every month. There's a little bit of money left over and they are doing something with it. At the moment, it's like under the mattress, sitting in their bank account, like it's doing nothing monetarily, but it's being saved.
Well, they're actually losing money in terms of the real value of money.
Yeah, due to inflation, you know, so the rising cost of living means that, you know, if you put 100 Rand under the mattress, like next year you're going to be able to buy less for that 100 Rand than you would be able to buy today. So the starting point is saying like, okay, you don't necessarily have to have a long-term vision. Just do better than what you're doing now, because now I can give you 8.5%. If you were to do that with Franc today, that's the interest that you could earn on that cash without having to lock that money away. So it's not as if I'm being a bank and saying, okay, I can give you that, but you've got to, not be able to access that money for 5 years. Again, who likes that prospect, right? Emergencies happen. You need your cash. So I think like that for me is a very clear and easy next step. I'm not having to convince you to think long term or have the luxury to think long term. It's just a question of like, don't lose money and be smarter with your savings. I'm hoping obviously that can convert a lot of people. And then I think what's interesting about long-term thinking, as with your psychological background, I'm sure you can appreciate, is you can only do so when you know that your immediate needs are being met. And obviously, emergency savings are a very real way of ensuring that your immediate needs can be met. So immediately it opens you up to thinking longer term. Okay, like I know if I lose my job next month, I've got some emergency savings, so I'll be okay. With that aside now can I start thinking about my children's education or buying a house or going on holiday, with my partner? Like those are all wonderful long-term, or retiring, with a good nest egg, whatever. Those are all really, valid long-term goals. And there's no reason, regardless of your income, why you can't start planning and setting aside money for that, right? But I've realized now over time, like setting up that emergency or that savings goal, that emergency fund, whatever, is like a necessary starting point for everyone. And then, think big, think long term.
I think it's about shifting the behavior, but it's also this is, I think, the last maybe strategic level conversation I would like to have, because I've noticed I'm getting into the selfish loop, because like you care so much about the problem and at like a macro level, and me being a strategist also discussing macro level. For the sake of the audience, want to get practical. But I think the point there in the cycle of poverty is that I can't afford to get a dental appointment today, which means I need to get a root canal next year. Or I can't afford to get a proper pair of, like, let's say, Timberland boots this year that would last me 5+ years. But that means I need to get a new pair of cheaper boots once every 1.5 years, and over the long term actually spend more money. And this is the trap of poverty, is because I can't meet these needs. I'm not even meeting my basic needs. I can't get any form of thinking around the longer term from a quality perspective that would actually make overall life a little bit easier to do. So I think we've got that problem. But now that we've really spoken a lot about why this is an issue, I mean, we've got the philosophy of it, we've spoken about the human behavior, we're understanding the like financial literacy part in terms of South Africa. I just bring it practically. How did you then acquire customers, right? The fact that, like, going back to the statistic, like the investment penetration 7%, financial literacy is so low. People aren't even necessarily saving with financial institutions, let alone investing. How did you get customers? Let's pause here for a moment. If you've made it this far into the episode, it's probably because we're talking about things that you're trying to implement in your business. You found your sweet spot in the market, you've gained momentum, and you've already been through a phase of growth. Because of this, you know that on the outside, growth is super sexy. But on the inside, it's incredibly difficult to achieve and to sustain. So now I've got a question for you. Now that you know the sacrifices it takes to achieve growth, how much time are you currently spending thinking about your direction and your next phase of growth? I bet not as much as you'd like, because you're still in the thick of it. Leading, deciding, pushing for performance, pursuing new opportunities, maybe even thinking about selling the business. See, your story is yours. But this chapter where growth meets complexity, this is when things get hard. Because you can listen to insights from podcasts and stories from people that have been there before, but applying it to your context is a completely different ballgame. So let me help you. If you want to have a 90-minute, no strings attached conversation with me, then head over to Metavolve's website in the description of this podcast below, and let me help you navigate this next phase of growth. Because at the end of the day, building a great business is complex, but it doesn't have to be complicated.
Yeah, it's an important question. And I think at one level, it's relevant to say, how do we get customers today? So most of our customers come through digital means, obviously. So they go to the app stores, they download the Franc app, and they get going. The majority of our users are still through word of mouth. So it's undeniable that there is, people get a lot of financial advice from their peers, from your family, from your friends. So we still, ask people, how did you hear about Franc? And a vast majority of them say friends or family. And I think obviously if you are coming with that sort of family recommendation, immediately the trust relationship is very different. Like there's less burden on us on having to build trust with you as a potential customer. We do obviously also invest in ads. But that was like maybe 2 years into the business. We started like paying for ads on, the most successful has been Google UAC, Universal Ad Campaigns. So which largely targets kind of app downloads, for example, and is still our most successful paid ad campaign. But we have also invested in sort of ads on all of the social media platforms, so Meta, TikTok, X, etc. But when we started, I didn't know how to do that. Again, like the founding team didn't have a lot of that expertise. We did outsource and did start investing and spending some money and trying to raise brand awareness. But I think from an advice perspective, thinking about new founders, you have to think about how do you generate brand awareness cheaply, and without a doubt, the cheapest way is PR. So put yourself out there, enter those competitions, like practice your pitch, like become a little bit of a
get on the founder files.
Get on the founder files, yeah. Become a bit of a performance artist. And we were lucky, we won Seed Stars in 2018. Again, some publicity came through that. We then got into the Google for Africa Accelerator, 20 African companies, only 2 of which were South African, 1 of which was us. So each of those opportunities got myself onto TV, and I think one other little micro piece of advice there, it's like you need to increase the size of the problem. I know, everyone's close to the problem, whatever type of problem they're trying to solve, but you need to tell the world about why that problem is a big problem. And, if you can get to know journalists, keep on knocking on that door about like, this is a big problem. It hasn't gone away. People still need to be investing. People aren't investing. Every year, luckily, there's a savings month. And so there's always interviews around the month of July, where people need to be talking about this problem and need to be thinking about that solution. So whatever your business is, whatever your problem is, find journalists, find outlets where people would be interested in learning more about that, and then become that expert who can, talk with authority around what that problem means, right? And then you've got free PR. You get your name out there.
And I think the point is it's also articulating it. I mean, just to self-plug here on my own podcast is to talk about the way we're articulating our mission and vision now. Is that we're still in the space because its strategy is dealing with building a sustainable business that can grow sustainably is it's such a there problem to think about and have, and it's such a proactive thing. So the way we articulate our mission now is that our mission is to ensure that as many entrepreneurs as possible can take a holiday and actually switch off whilst their business keeps growing. And our vision is imagine a world where 10% of small to medium-sized businesses, just 10% more, were able to sustain themselves beyond the lifetime of the people that founded it. What would that look like for the economy? What would that look like for personal wealth? What would that look like for job creation? And that's just our view in terms of how we're going to make the world a better place. And what I found is just articulating in that way is it's not necessarily on the communication of the problem, but understanding the picture of it is like, damn, okay, there's a lot of people out there that would resonate with that and experience that and are thinking about those themselves. Had to use that up. You mentioned the fact that we got to talk about the problem here. I got to do it myself. So Tom, in terms of the customer acquisition, predominantly coming from family and friends, I think that's again the nature of any business is comes social proof of value. So the point there is that in terms of being able to generate referrals is a huge indication that what you're doing is valuable in itself. Because if you're not getting referrals from people that have used it, then you should probably be asking questions. So you've got that, and now the platform is, I mean, again, just on the B2C players, like, so the core product was facilitating investment into ETFs, money markets, and doing that through a goal-based platform where you're going to get a debit order and we distribute funds accordingly into these different players that's going to help you achieve certain financial goals. Now I see on there is like you've also got ways for people to save up for their kids. You've now got a B2B play. So I want to understand now, besides, I want to give the B2B play its own conversation. But from you're getting these customers, you've got 65% of people that would be disappointed if it's gone. You've got clear product market fit. You're generating referrals left, right, and center. Word of mouth is your main source. So how have you now started to expand with existing customers? So talk to me about what have you done to generate further revenue from existing customers and develop new products?
Yeah, it's a great question, and I think it also comes down to like understanding your business, right? It goes without saying, I live off a document called operating metrics. It doesn't have to be fancy. Ours is like a Google sheet. We claw the data from a combination of sources. We do have live dashboards on Looker Studio, but operating metrics allows us to kind of very clearly say, okay, what is our average revenue per user, and like know first off like where that is, and then secondly, okay, what is my lifetime value of the customer? So it was clear to us early days that we needed to find ways of increasing ARPU, because having somebody sit with like a 2,000 Rand investment deposit where we are earning blended 0.7% of assets under management we would need a lot of people before that was going to be paying the bills. So then it's thinking about, okay, well, I've already got a relationship with this person. They're engaging with me. They're depositing. They're investing. What are their other pain points? And like I mentioned, early days, like I think the first one was people, when they need their cash, they need their cash. We're a goal-based investment platform, and emergency goal savings is one of those goals. So it's unsurprising that people do need to access those funds. And when they do, typically it's an emergency. So you need to give them access as quickly as you can. It's frustrating because the asset managers sometimes take a few days for those funds to clear, obviously depending on what the underlying investment is. So yeah, it became clear to us that we could monetize that. So yeah, we provide that liquidity. So we basically pay you out of Franc money, knowing that the money is going to come from the asset manager a couple of days later, and we're happy to do that for a fee. So yeah, I was just thinking about, okay, well, where are the opportunities where I can do that? The other thing, which has more recently been rolled out, is we've launched a Bitcoin goal, which is a sort of a Bitcoin kind of fund, if you will, where people can get access to Bitcoin without taking on the risk of managing their own investment crypto wallet, which comes with a lot of risk. People have lost the keys to that wallet, and then there goes all of the assets sitting in that wallet. So yeah, again, we can provide that de-risking, that security for a fee. So there's a little bit more that we can charge there on that particular goal. And we've also, as mentioned earlier, like the savings to the investments, we've now expanded into having different types of accounts. So it's not like no longer a one size fits all. It's recognizing that some people, because of where they are in their life stage and thinking long term is not possible, a savings account is the best starting point, and that's what they want, and that's what they can afford. But there are people that are wanting and able to pay more to get access to more kind of products and services, if you will. And yeah, so we've launched different types of accounts. The Franc Pro account is going live next week or two, which I'm excited to announce. And yeah, that gives you access to a financial advisor to be able to kind of have a one-to-one conversation with an expert to be able to kind of give you an overview. Not so much in terms of selling product, but educating. So talking and getting a real deep dive in terms of where you are in your personal finances. So the rationale there, and continues to be the rationale from a product development perspective, it's like if you can invest engineers' time in doing any activity, what is going to bring either significantly new customers, and that's also always a bit of a hard bet because you don't know until you've actually built it and tried it, or what is going to generate revenue. And always you've got to kind of do a little bit of both at the same time. And that's been the strategy. So we know we can build this product and a certain portion of our user base will take it up. So we've had a wait list, for example, on that Franc Pro out for the past few weeks. And already it's over 1,000 people, right? So we know when we release next week, it's likely that we'll get 1,000 signups day one. Great, and that is, revenue that will be, new into the business, which is fantastic, opening up a new revenue line. At the same time, you've got to constantly innovate on the product, right? So it's opening up new investment opportunities like the Bitcoin goal. And some people may be attracted to Franc because they feel scared of maybe investing directly through a crypto exchange. And here in Franc, they can have both their crypto investments and their long-term, emergency savings and their long-term investment goals all in one place, and that's great because we've expanded effectively the range of product offering that, will attract a person to maybe choose Franc over any other investment provider. Sorry, that's a long question, but hopefully gives you a sense of the thinking of how we go about it.
But the reason why I love the way that you answered that question is that you only actually really started speaking out about because you mentioned different products, but you only actually described, and the question was around what products have you done to really expand revenue with customers. You only answered that part in the last 10% of each answer that you gave per product. Everything that you spoke about was, these are the needs of the customers. This is how they're already behaving. This is what they're asking for. This is what they're looking for. And this is what we've identified what they want and how we can provide it to them. And I just really want to highlight that in terms of it, because I loved listening to that, because that's kind of how it should be done. Instead of having a product roadmap or a feature roadmap in terms of your ideas, in terms of what you think is going to make the tech great, it's actually based on what are the needs of the market and the customers that we're already serving, and how else can we better service their needs. And to your point on what you're actually going to be launching next week, is that you've got all these customers on the platform that what they're asking for is not necessarily another product, but the thing is, I want a slightly more tailored customer experience, where I want someone to help and support me and guide me through this instead of just the DIY approach. I want a do it with you approach. And so you're like, cool, happy to do that, but it's going to cost this much in order to be able to service that need profitably. And they're like, thumbs up, we'll sign up for this. And you're like, cool, let's launch it. And I think that's I really want to emphasize that, because not only is that the best mentality and way of thinking in order to approach it from a product development perspective, but what I've seen so often is, because we work always at the scale stage predominantly. And what happens, there's always this time where when the business starts getting complex, there's multiple markets that are operating in. I've got a team of managers. You've kind of stepped away from being the front-facing person. You start to lose track of what the customers are doing, and you start making decisions in your business based on your own intuition and what you think is best, rather than what's actually coming feedback from the customers. So the fact that you're still, and I'm assuming that there's a deliberateness to that. But the way that you spoke now is it's just naturally how you think, which I think is amazing, and just something that I really wanted to emphasize.
Thanks, man. Appreciate that. I mean, it is a team. And so the way that we now operate as a team is that anybody in the team can put forward a one-pager, right? And that is a new proposition, right? Something to start working on and include in the next quarter. These one-pagers are effectively like little MVP/business case structures. So you need to know, okay, what it's going to take. What does the MVP look like? You don't have to mock it up, but you've got to have a clear idea of what it entails, so that it can be quantified from an effort perspective. Justifying why we're going to do this. So what customers have you spoken to? Where are you backing up the need coming out of that? And then commercially, what's in it for the business? What is the lift? And I think by crowdsourcing that from within the team and then interrogating each of them. So it's not like we have a pass and fail. It's there's a gap here. This could be an opportunity, but let's maybe get some more data. Let's speak to some of our customers to find out actually if this need really exists. So typically that one-pager sponsor then would take it on themselves to call some customers and find out, hey, is this something that you want? Or maybe it's some data analysis on previous kind of customer calls or customer surveys that we've done. And then update that one-pager and bring it again to our next town hall and say, hey guys, I think this is what we should be doing next quarter, and this is why. So and I think that is part of our culture. We're a small team. We have to crowdsource innovation. It's not coming from, me and Seb only, but it's been very effective at allowing us to gather collective feedback from the team. And the team is quite diverse and has had different experiences, whether it's talking to customers or on customer calls or, customer support queries, or building the technology. It's panel beating the idea from multiple sources to make sure that the MVP is tight, the need is clearly understood, and it's clear what needs to be done in order to achieve it. So, that's the mechanics, if you will, about how we kind of go about our product development.
I love the answer, and also, again, it highlights your humility. So what I need now is for you to let me compliment you for a second, because what's highlighting this to me is that this is the reason why you won Seed Stars. There's a reason why you were part of Google Africa. There's a reason why you're getting these awards. There's a reason why you're doing this, because especially in the early stages, as all investors know and everyone talks about, it's about the team. It's about the founders at the core. And what you've described now is a certain leadership capability that you built into the culture that many people once they've got their first level of management in place, 40, 50 people, is a huge problem for them. How is it that I can source innovation for the team? Why am I the person coming up with the ideas all the time? How can I get my people to take initiative and ownership? And for you, you've done that quite naturally. So thank you for bringing that up, because actually something I actually want to double click on that. And can you just practically say, how do you manage that process? How do you incentivize your people to do this? Is it something that's intrinsically motivating for them to just come and spot the problems? Even if they do something and they build a product that makes the company loads of money, do you say, okay, thanks, bye, back to your normal salary? How do you practically manage this process and then also reward your employees for great ideas?
Good question. I think the first thing is transparently, the shareholders in our business are the team. From day one, I didn't have money to pay. It was difficult to raise cash, so we implemented a dynamic equity model, which has been promoted by Slicing Pie. It's a book I would highly recommend any founders or founders wannabe to read it. Slicingpie.com is the URL. It basically allows you to transparently set up an equity incentive structure where people know what's going to be in it for them. If they're willing to put in their time, their cash, relationships, or generate IP. So it's very transparent. We literally have an Excel spreadsheet which determines our cap table at the end of every month after the contributions are sort of accumulated. And obviously, it goes without saying that everyone's growing the pie, right? So it's not a fixed pie. It's like as people put more into the pie, the size of the pie is enlarging, but your proportional slice of that is obviously influenced by what other people are putting into the pot. So very clearly, there's a direct equity incentive for people to grow the business. So it's immediately aligning those incentives. But I think there's another element which is really important, and it's, I suppose, I don't know, my takeaway from like Discovery Vitality. I mean, you may know Active Rewards, which is the program for kind of a weekly exercise goal.
Yeah, I'm a full Discovery client, by the way. Like I've got almost all their products on Vitality.
Okay.
I'm
So
in the matrix.
But for listeners who don't, it's an incentive where if you complete your goal within the week, there's typically some reward. They started off by giving away free smoothies, and now it's you play a game, you can get some Discovery miles, maybe you get a voucher for a coffee or something. But when they started it, they observed very weird behavior. Well, it's not weird. I think now it's very intuitive. It was initially people were capitalizing on their smoothies every single week. After that, people were getting the goal, getting the voucher, but not capitalizing on the smoothie. It wasn't like that they were wanting to lose weight and didn't want the smoothie. It's because completing the goal, completing the circle, like achieving the goal was its own reward. And that for me is like made me realize that actually intrinsic motivation, when you can unlock it, is far more powerful than any incentive is ever going to be. And so the intrinsic motivation in allowing people to create product is so valuable because everyone has a slightly different view on the world. They see a problem in front of them. That problem is important. You give them the opportunity and the reins to define a solution, and then like even if they're not in the engineering team, like the kick that they get when they see that product, like, hit the app stores and being used in people's hands far outweighs any cash incentive you're going to pay them for having done so, right? So yeah, not to I'm not trying to exploit that through that sort of like slicing pie dynamic. People know that
It's just
they're
motivational
contributing into
psychology.
this team. Yeah. But it's like trying to harness that, like, you have not only the autonomy, but also, the agency. And then obviously it's not going to come without, we're going to panel beat. We want to make sure that this is like best for the business and best for the team. But through that process, you're learning about how to build product, what needs to be thought through in order to get something to market. Which I take the campground. What's it? The campground rule with employees. I want to leave the campground better off than when I found it. So, like, if an employee having worked at Franc is better off because they've learned new skills or they've learned a new way of thinking, like, I've done my job. And given that view, like, I'm confident that like the people that do work with Franc hopefully do come away with higher order thinking in terms of how to develop product.
So now that we're on the people topic, right? So you've gotten them not only intrinsically motivated, but also genuine kind of stake in the business in terms of their own performance and their reward to do so. What else do you do to help improve or maximize the productivity and performance of your people?
Great question. So yeah, we also operate OKRs, and I'm a big believer in what OKRs can achieve. It's, for some people who may not be familiar with it, it stands for objectives and key results. The other major kind of management style is KPIs. So two different schools of thought. I won't burden you with the history, but fundamentally the objectives and key results are defined by the individuals themselves. It's typically sort of a tree structure which we follow. So every quarter, me and the executive team will come together and define the company's OKRs for the next quarter. Then each team goes away and says, okay, well, what can we do to support these objectives? And almost they're coming up with the initiatives or, the things that they want to do and experiment with that they believe is going to drive the key results most effectively. And again, it's finding that balance between aligning the kind of the overall arching strategy with the individual autonomy to be able to define your activities, right? So instead of it being like a top down, like, here are your KPIs, you better deliver on these or else, it's now like, oh, actually, I want to see if my idea is going to be successful. It's just a fundamentally different psychological proposition. So yeah, we find kind of OKRs work really well. We obviously also use it for individual personal development. So the OKRs go all the way down to the individual. Like, what do you as an individual want to do to support the team in achieving their key results, which is supporting the company and its key result? And we use that obviously from a personal development perspective. Okay, you're a junior engineer. To get to be a senior engineer or the next level, you need to demonstrate A, B, and C. Okay, so your key result is maybe doing one pull request review or like taking the app live, the next app release live or something like that. But it's like demonstrating that they're taking on ownership, they're managing the whole process end to end, they're ensuring that they're making decisions about what's going to be included or excluded in the release depending on its state of readiness, etc., etc. So again, I suppose my philosophy is always about harnessing the individual's intrinsic motivation. Leads, I think, to kind of the easiest way to get best results. I mean, you can be a micromanager, but then how much effort that takes on the behalf, and I just don't have the time and the energy, nor frankly the inclination to do so. And it's maybe just my management style. I'm very lazy. I'd far rather spend energy in like alignment and then like autonomy, because it's far less effort on my part, right? Because I know that the people know why we need to do what we need to do. And then it's just being very clear about measuring its success.
So yeah, again, I love everything that you've said for three reasons. One, like the number of people that I hear talking about an issue of accountability. How do I get my people to take accountability? my simple question to them was like, well, how much autonomy have you given them? You can't really have one without the other. The second point, obviously, from a strategist perspective, the fact that you utilize OKRs, we do as well, but also only on a quarterly basis. So we establish annual goals, and we do this for ourselves as well. What are annual goals? And then what are just our OKRs for the next quarter? One thing that I love about what you've done there, that I definitely want to employ, is because what we usually recommend is once those OKRs are developed for the strategy of the business, take it down to your management level and then with your team for them to discuss around, okay, how is it that they're going to contribute, cascade that into your team. And you've done that directly with your team already in terms of like, how do you, this is where we want to go. How do you think you and your job, what are the OKRs you want to set that's going to help us move in that direction? And obviously that'll be a bit of an iterative process. And so you say, it's like, okay, cool, I think those are the OKRs to do that. And then obviously blending that with with their own personal motivation and what they want to do. So I think that's really, I think it's quite practical. It's quite inspiring. The only question that I have for that is, I think a lot of people would buy into that, but might have a bit of a fear response. Like, I'm worried about over giving too much control. What about the mistakes? You talk about like pushing to production and, having someone who's a bit of a junior engineer wanting to go up and giving them more autonomy to do that, especially as you get more senior, the stakes get higher. Like, it's all good and well and sounds great, Tom, but how do I actually go about ensuring that things don't go wrong?
Yeah, it's interesting, man. And I think the only way I can respond to that, building a business is about risk. There's risk everywhere you look at it, and there's no way you can like take that risk out of the equation. And the irony is that like if you are, you've already taken risk in establishing the business, right? And you've got to be somewhat confident that they're not going to cause the business to fall over. And very often that's not the case, right? But taking a little bit of risk to allow somebody to prove themselves, I would argue, is worth the upside because you're unlocking so much more, right? So yeah, if you're going to be risky in the fact that you're doing something that other people aren't doing and taking on the uncertainty, like take on a little bit more risk when it comes to trusting people. It does obviously lead you back to like doing a little bit of, it's spoken about a lot, but actually hiring well, I think is really, really important. Like don't, what's the word? Don't settle, don't undermine yourself or the business by kind of taking on somebody you don't think is going to doesn't have what it takes to add value to the business, because you're never going to have that opportunity of doing that, right? Whereas if you've chosen well, you think that this person's really got the minerals to deliver, like back them, right? And give them the opportunity to do so, basically.
Yeah, Tom, thank you for the honest conversation. I usually say that at the end of the podcast to wrap it up. I'm going to say it like, I guess, 2/3 of the way through. It's really good to have such authentic candor, two of my like the highest level values. So I appreciate that. I guess the last topic that I really want to get into, second last, I guess, is the B2B play. So now talk to me about that, because obviously at face value, until I actually deeply interrogated it, it's like, okay, well, you've got the B2C play in terms of investments. I kind of get that. You're a marketplace facilitator. How does that work from a B2B play? What was it? And obviously dug a bit deeper and you're plugging into the value chain of other businesses. But I guess instead of me giving the generic or consulting language explanation of what it is, can you just explain to me why the B2B play and how that's been going?
So, as mentioned earlier, I think the opportunity in the financial services space is to like build an asset, build a resource, build something, and then allow as much usage of that something as possible. So I think, that then tears down this B2B, B2C mindset. Like building what we needed to build to get, because we thought it was the right solution, which is taking away the barriers of entry to investing, meant that we built a platform that could allow somebody to start investing from R1. But having built a key resource which has no competitor in the market, the next thing is like, okay, well, how can we get more people to use this? And sure, there's a direct customers who can go to the app store and then, or go onto the website and access that product. But then the other is like, okay, well, are they companies that have need for a savings wallet from high interest, R1, first R1 access. And they are, unsurprisingly. So our B2B then was just expanding access to that. Obviously, it's a new revenue stream. There's, again, thinking through that, one-pager problem, if you will. It was clear that you could start charging licensing fees. And we do as a minimum usage licensing fee, but there is a revenue share relationship with what we call our distribution partners. But, turning our technology to be externally accessible wasn't rocket science. Their partners are using effectively the same API endpoints. They're just doing so through a portal that allows us to verify the credentials of that third-party provider. So it wasn't a new build. It's just adding like a security layer to ensure that it's not our own app effectively speaking to our backend services. It's now a trusted third party. So it was, I think, new in the sense that we had to start thinking about B2B cycles, B2B sales cycles. But given that we're so small, it was a burden that largely fell on my co-founder and my co-founder in particular, who's been fantastic in this regard. It does take time. There's just no way to cut it. Even if you've got the best salesperson in the world, like the lead cycles anywhere from 3 months to our longest is 18 months. But the fact actually that we've got now a hybrid business means that they feed off each other, right? So we're innovating constantly to satisfy the needs of the individual. But for example, like we're going to be launching a retirement annuity in the next quarter. But that now immediately has an application in our distribution partner space, right? Because a lot of our partners are servicing employees and they want their employees to save. Now you've got like an employee benefit solution, right? Which has come about organically as opposed to, creating from zero. So I suppose it's an organic way of viewing product evolution and development without being constrained by thinking that, we're a B2C company and that's all we are. It's like, no, where else can we extract value and revenue? This is another opportunity space. Exploit.
But the point is, it's still coming down to the same view around needs, right? It's you're going down to what is the behavior anyway. It's like we have this customer segment that what they're trying to do is set goals for themselves financially anyway around their lifestyle that they want to achieve and they want to invest money towards as well. But then it's super difficult to do that. We're going to make that easier. You've got all these companies that, from the HR perspective, it's like they've, especially given my background, this is the easiest one for me to refer to. But the point there is like we've already got these employee benefit schemes that people aren't even opting into, even though there's great value for them because it's so far in the future, or it's difficult for them to opt in and give their money away. How do we make it easier for them because it's genuinely benefiting them? It's something that we as a company are doing anyway, but our people aren't necessarily taking it up, or they don't have the options that they're looking for. So how can I make it easier to do that? I think the point there is that this is the kind of beauty of entrepreneurship for me, is that it's so complex and it's so difficult, but it's also really uncomplicated. It's like what are people doing regardless anyway, and how can you make it easier for them to do that? Like that's the simplest thing. And like the same view goes to your existing customers. They're already buying from you, they're already adding value. How can you make it more convenient, as easy as possible for them to consume the same, if not more value? Then they're never going to go away. And I think that's really where it is uncomplicated, but also why I say my full name's Cameron, easier said than done, Coots. So Tom, one thing you've also brought up now that I've also really taken for granted in the conversation, and I think in the complexity of your own business, is the security. I mean, you're in such a heavily regulated and legislated environment. You're dealing with people's money. You're obviously dealing with people where there isn't much trust. Talk to me about how you've had to manage security and regulation in this space. We haven't spoken about that yet.
Yeah, really important question, and it comes up a lot. So I think the first thing is, we had to back ourselves that we are people of integrity and that we are going to build a business around that core value. So I am the key individual on our license. It was important to me that we acquire a license and are regulated by the FSCA, the Financial Services Conduct Authority. And, one of the founding team is our compliance officer. And that we have built a business that is, fully compliant with our annual kind of audits. it was also important that we built good quality technology. So I was fortunate enough to partner up with Kyle. Kyle Welsh is our CTO, ex AWS engineer. We met first at Discovery. He's like a fantastic guy and one of the best engineers I know. Ensuring that we built a system that was hyper secure. So like from a design perspective, you need to take security take it very seriously and ensure that, his language, he says, you reduce the surface area of vulnerability. So what that means fundamentally is that you reduce your vulnerable exposure. And so we've designed a system that has very little leakage points or opportunities for kind of attack, if you will. And then the last stage is convincing other people of that fact. And that has two dimensions. Obviously, when it comes to individuals, you just need to be true and be very transparent. So that means, when you mess up, and you will mess up, be honest about that and try to rectify the situation as quickly as you can. Don't hide, don't cover up, don't be, don't be a douche, basically. And so we've taken customer success, customer support very, very seriously, and try and respond to everyone who has a query within a 24-hour period. So people trust that they will get an answer about what's happening to their money if something, has gone missing. And more often than not, it's like somebody put the wrong promo code, right? The wrong unique kind of code for assigning money into their account. So those issues are easily resolved and appropriately resolved. The other kind of trust sales activity that needs to be invested in is convincing partners. And there obviously we can show them our technology stack, which we do, and show them our penetration test results, which have always come back in flying colors. Our kind of endorsement from AWS is running a very tight ship with kind of operational efficiency. But we're now going to the next level because we're interacting with listed companies of getting ISO certification and SOC 2 certification, which comes at a cost, but there are efficient ways to do it, and we found an efficient way to do it. But then again, it's just it's an important necessary expense, so that any partner coming on board immediately knows that, okay, these guys are taking their cybersecurity really seriously. They have processes in place that ensure kind of data integrity and access controls, etc. So I think that's one, you've got to set the values. Then secondly, you've got to actually do the heavy lifting, which is actually ensuring that you are running a tight ship. And then lastly, you've got to tell other people about it and ensure that you just keep the communication channels very, very open and be transparent.
So talking about security now, and obviously dealing with these large financial institutions, you mentioned AWS running a tight ship, and you've been able to do this locally, right? You've got Alan Gray on board, you've got Satrix as a partner, you've got a few others whose names are escaping me right now. But you've done that in a South African environment. I think obviously looking at this business, and even when we're talking about the potential in the market and just how, whether it's a vitamin, whether it's the financial literacy, whether it's investment penetration, it's going to be, there's quite a lot of resistance, right? I think for you to scale your share of the market here in South Africa quite quickly. What's your view into expanding geographically? How have you explored that so far? What's your basic geographical expansion strategy, and how's that going?
Yeah, so I mean, in one context, the opportunity exists across the continent. If anything, it's even greater. So if you look further up, the savings rates tend to be in and around sort of 65%. Kenya, 75% of adults save, but the investment penetration is less than 5%. You're looking at 1%, 2%, 3% of the population invest in any meaningful way. So there's huge opportunity. And I am bullish about being able to attack that. The real challenge comes in around regulation. There's in East Africa, there's kind of progressive regional licensing arrangements, so that if you're licensed in one country, you're licensed in Kenya, for example, you can operate in Rwanda. or Uganda, for example. There's nothing like that in Southern Africa or the SADC region. So our next immediate step is looking at the remittance space. So, as I'm sure you know, South Africa, just given the size of our economy, we soak up a lot of workforce, people coming from the region, and a lot of people are sending money home. But very often that money going home is either used for operational needs, but very often the people here are doing so with a savings goal. I'm wanting, our nanny, for example, is saving up to build a house back in Zimbabwe. And that's a savings goal, right? But so why shouldn't she be getting, money market rates, 8.5% interest for saving up towards that goal? And then obviously being able for us to be able to execute the delivery of that capital back to her family efficiently. There is also an opportunity, if we get that license, to allow people to invest in offshore securities in a foreign currency, again, protecting against a rand devaluation risk. So again, it's thinking strategically about what license is going to give us the access to new markets, as well as access to new revenue streams, and then slowly work our way out in that regard. It's sad to say that a lot of the financial services, so the product providers in some of our regional countries, are very poor. The stock market maybe has 50 listed entities, right? And the asset managers they're a few and far between, and don't have digital systems or the ability to interact with them in a digital capacity. But I think that'll change. And who knows, we may be able to partner with some of those partners who are operating trans-continent, like EcoBank, for example. Standard Bank has a large footprint across the continent. But the banks still at the moment aren't really on board the investment train. They're making good cash on deposits. They're not there yet. I think that'll change quickly. And I think the first person to move in that space, will probably cause a wave of change. But that hasn't happened yet. And so, again, I think expanding for expanding's sake, can be difficult. You've got to be conscious about are you timing it right? Because that comes at additional cost. It comes at additional distraction. So yeah, we kind of just keeping our eyes open, putting our toes in possibly into the remittance space, getting our foreign exchange license, allowing us to offer new products. But kind of going in bullish to try be like the Franc in Malawi, for example, is not something that I see happening in the kind of, short to medium term future.
Yeah, no, fair enough. I understand that. But what I've got a thought coming to mind here is almost why reinvent the wheel? The visual metaphor I have is just this massive boulder that you're trying to put all of your weight against to very slowly start moving, but eventually if it takes off, that's the size of the opportunity on the continent. And I think where I'm going with this is, why not, and what I've spoke about earlier is just going where the customer's behavior already is. What about the economies and the environments and societies where investment is already the norm for people? What does it look like there? Obviously, the competitive landscape is radically different, but have you considered going to more established economies for this?
Yeah, I mean, obviously, the one that comes to mind is Nigeria, and interestingly, in Nigeria, there's a very limited credit market. So what that means is you can't buy a car on financing. You can't get a personal loan. You have to put down 2 years of rent to rent an apartment, which means that Nigerian saving rates are where we're sitting at 7%, they're up to 35. So, they're way ahead of us. And it is a different competitive space. But there again, you've got totally other different dynamics. The Naira has been crashing recently. So most of the wealth platforms have been allowing people to invest offshore, operating in a very gray regulatory zone, only to be shut down by the regulator. So I'm also there's opportunity, but there's also a little bit of hesitancy. And in all humility, I honestly don't think we've really cracked the South African nut. And I think finding out how to convert somebody or start somebody on a wealth creation journey in an efficient way. We're getting there, like 20%, but like I said, I want it to be 50 or 80. And obviously not only have somebody set an emergency fund, but like take them down that whole pathway, right, towards investment goals and creating wealth in the long term. So I think we've got the product vision of what we need, but I'd say in 12 months time, we'll be in a very different place to say like, oh, actually this model, this funnel works. We can take somebody who like knows nothing about equity investing, the stock market, totally new concepts. We can take them from moving their savings from hypothetically under the mattress into, a Franc savings account to opening up long-term investment goals. If I think in 12 months' time we'd be able to say that, which might change my mind. So like, okay, I think we can go into Nigeria with a playbook, that could work. But at the moment, I'm not. Maybe it's just my own anxieties, but I don't think we're there yet.
Yeah, no, fair enough. And to be honest, I don't think it's your own anxieties. I think people that are considering geographical expansion when they've only got a sliver of the market locally are thinking about it way too soon. So, look, besides the complexities of geographical expansion, you're talking about the complexities in the regulatory environment that you're facing just on the continents alone, let alone trying to go Europe, USA is like. Again, I find it very interesting that when people talk about geographical expansion, they skip Africa, go straight to Europe, USA, come back to Africa, and then will maybe think about Australia and then Asia and South America, as if like, geographic expansion can't happen globally. But anyway, without going on that point, what other challenges are you facing about within your own scaling journey right now?
Yeah, so I mean, we're on track to break even, kind of end of 2025, 2026, but we're not there yet, which means we have to raise capital, and that's always going to be challenging in an South African context. The global VC market space is down. Kind of appetite for B2C or any company that has a B2C element is down. So we are always looking for capital partners and people ideally that have a long-term view. We are building, I believe, a really solid business that is solving a really meaningful problem. So, if any of your listeners are, in the capital game with aligned interests in that regard, then please do get in touch. The other is obviously then it comes down to growth. So, we've touched on a little bit of the B2B sales challenges. How do we get better at reducing that sales cycle, getting companies over the line earlier? How do we unlock new product market segments efficiently? And then also on the B2C side, as mentioned, how do we fundamentally improve that conversion rate? Not only that conversion rate, but obviously reach more people. So how do you scale? Without necessarily like trying to compete. I mean, it's very sad to me to see the success that the gambling platforms are having. And I last time I checked the statistics, it was 51% of South African adults gamble online at least once a month, and that's up from 46% last year. That's a lot of people.
Yeah, there's a lot of growth happening in that space.
And they've got money to burn, man. Their margins are like better than mine. That's for sure. So, I don't want to go into like a head-to-head paid ads battle with them. So how do I find a cost-efficient way of acquiring customers and acquiring good customers, right? So the customers that actually want us, so for whom we're a painkiller. And again, that comes back to like, we now know a lot more about like actually who that target market is. Okay, so now we can think very carefully about how do we exert influence? How do we get our brand out there? How do we make sure that Franc is the first thing that pops into their mind when, young women are thinking about doing something with their money?
Sure. So it looks like there's a lot in front of you. I mean, also, but an exciting time when talking about breaking even next year. So I guess just to expand on the topic and maybe wrap it up, is like, what does the next 6 to 18 months look like for Tom and for Franc?
Yeah, so I think we're on a clear pathway. we want to continue what we're doing. And I think what's really nice about the focus that provides, I mean, like, honestly, the moment we break even, like any capital that comes in, I'd like to think it comes in on my own terms because it's focused on growth. And I'd like us to be in a position where we can grow sustainably and organically. And I think we have the ability to do so. We've built a very efficient business. So our costs are low. Our gross margin is high. But yeah, I think it's rolling out a lot of what we discussed. So strategically launching some of these pathway products. So it's not just a one size fits all. It's really starting people, meeting them where they are at, and then taking them on a journey by kind of, helping them think long term and expanding access to, more valuable product. Building the team, obviously, like, it is very satisfying to empower other people to pick up, your vision, right? And crack on. Hugely empowering and hugely reaffirming for me personally. So yeah, if we can, and again, fundraising, God willing, can assist with that. Because yeah, I really think that we've got a business here to solve, and we're building a good business. I just, want to see it survive and succeed.
And I couldn't agree with you more, because also just from this conversation with you, you're doing it for the right reasons as well. So Tom, thank you so much for your authenticity. Thank you so much for your transparency, and thank you for being on the Founder Files. I guess just to finish it off, what's the one question that I haven't asked you that I should have asked you that you'd like to answer now?
Very good question. I think it's something that a lot of people are intimidated by the prospect of becoming an entrepreneur, or like of taking risk and doing it. And a lot of people think that it's born, not bred, if you will. That like some people are entrepreneurs and other people are not. I would encourage everybody to think about choosing something that is important to them, choosing a problem, because life's short. Be affirmed about what you're doing and why you're doing it. And I think, having meaning or finding meaning in life is very important. And a lot of that comes through like what you choose to do with your time. And when you think about what you want to do, I think a lot of people would naturally maybe gravitate towards a problem that maybe is not getting a lot of attention, or maybe something that they feel like they can make a difference in. So if that is the primary motivator, like the why is more important than the how. And then if you have the right why, like jump in. So I don't know what question would be eliciting kind of a discussion on figuring out the why. But I think it's important for people that are thinking about, starting a business, or, taking that leap of faith, or leaving behind that paycheck, focus on the why.
You got a very inspirational end to the episode, Tom, and you could give Simon Sinek a run for his money there. So thank you very much for being on the podcast. Thanks for ending it in that way, and I couldn't agree more. Here's to you living your why.
Thanks, man. Appreciate it, Cameron. Thanks for the opportunity.
My first reflection today is about meeting your customers where they are. It's such a critical mentality and strategy that we get all of our clients to do from the very beginning of working with us, because meeting customer needs is where value is added. And the more I talk about this, the more obvious it seems, but it's one of those things that's easier said than done until you really get into the habit of understanding the needs of your customers. It's why we gather so much feedback from the people that we work with. It's why we're constantly talking to entrepreneurs, because we really want to be able to meet their needs. And I think Tom is a great example of doing this well. So this conversation really reinforced for me that the more you understand the needs of your customers, the more obvious your growth ideas become. Secondly, it's about giving people autonomy to unlock intrinsic motivation and crowdsourcing innovation from your team. I think Tom does this so naturally and so effectively, and it's something I believe in so strongly, but I could be doing better myself, and he's really inspired me to improve on today. At Metavolve, we're good at setting our strategy and working towards our objectives. I mean, I'd at least hope so if this is what we do for our clients. But I think I could unlock the intrinsic motivation of our team a bit better by giving them more autonomy to pursue ideas. So I definitely want to take what Thomas does, chat to Brett, my business partner, about this and see how we could do this with the team. Or, Luke, if you're obviously watching this, and the rest of the team listening to this, if you've got some ideas that you would like to have some more autonomy and achieve our objectives, let me know. Love to hear it. Third, and finally, it's about being obsessed with the why. The why behind Metavolve is to create more sustainable businesses. The one side of the problem is that the large majority of small businesses will die. But the other side is that even if they do survive, many entrepreneurs are stuck in the founder's trap and can't enjoy the fruits of their labor because their business is so dependent on them. This is why Metavolve exists, to ensure that more entrepreneurs can take a holiday where they can actually switch off and their business keeps growing. My reflection is that I don't actually talk about this enough, because this is what we care about so much, and I don't really punt it out into the world. And Tom has really inspired me to own that and talk about it more. And we even actually spoke about it offline afterwards to actually do so confidently. So I'm definitely going to do more of that and do it authentically. And that's it for me for now. So thank you for listening to another full episode of the Founder Files. If you know of any other founders that you think would be a great guest on the podcast, or if you yourself are struggling to grow your business or get out of the founder's trap, then please reach out to me and let me know. So until then, and until next time, cheers for now.